The Empire State Building stands as one of New York City's most iconic and recognizable landmarks, towering over Midtown Manhattan with a rich history that intertwines ambitious engineering, severe economic hardship, clever financial strategies, and remarkable long-term resilience. Its story reveals how a building can represent more than just physical space for offices. It can serve as a powerful tool for preserving and growing wealth even when many floors remain unoccupied. The origins trace back to the prosperous late 1920s, a period Americans call the Roaring Twenties. The nation enjoyed widespread economic growth, with booming industries, surging stock prices, and rapid urban development. In New York City, developers raced to construct ever-taller skyscrapers, each aiming to capture the title of the world's tallest building. The Woolworth Building had held the record for years, but by 1930 the Chrysler Building claimed it, with its elegant spire reaching 1,046 feet. This competitive spirit inspired bold projects. Two influential men led the effort to build what became the Empire State Building. John Jacob Raskob was a prominent businessman who served as a top executive at both General Motors and DuPont, giving him deep financial knowledge and access to capital. He joined forces with Alfred E. Smith, popularly known as Al Smith, who had been elected governor of New York 4 times and ran as the Democratic candidate for president in 1928. Together, they created Empire State Incorporated, a company formed specifically for this venture. They targeted the valuable plot at 350 Fifth Avenue, home to the famous Waldorf Astoria Hotel, a luxurious landmark owned by the wealthy Astor family for generations. Economic shifts, including the effects of national prohibition laws that banned alcohol and reduced demand for upscale hotel bars and restaurants, made the owners willing to sell. The land deal closed in 1929 for approximately $16 million to $17 million, a substantial sum at the time. The architects selected were Shreve, Lamb and Harmon, who produced a clean, modern Art Deco design featuring a limestone exterior, a strong steel skeleton, and multiple setbacks to satisfy the city's height and light regulations. The final plans called for 102 floors, a height of 1,250 feet to the top of the mooring mast, originally intended for docking dirigibles, though that never happened, and later additions like a television antenna in 1950 pushed it to 1,454 feet. The total project cost, including land, came to roughly $41 million. Preparations moved quickly. The old Waldorf Astoria was demolished in a matter of weeks during late 1929 and early 1930. Groundbreaking for the new tower occurred on March 17, 1930. The construction team achieved an astonishing speed, sometimes adding more than 4 stories in a single week. At the height of activity, as many as 3,400 workers labored on the site, using advanced methods for the era. Riveting gangs secured steel beams, concrete was poured efficiently, and supplies arrived through well-organized logistics. Despite the dangers of such rapid high-rise work, official records noted only 5 worker deaths, a relatively low number compared to other major projects of the time. The entire structure was finished in an incredible 410 days, just over 1 year and 1 month. On May 1, 1931, the Empire State Building officially opened to great fanfare. President Herbert Hoover flipped the switch from the White House in Washington, D.C., illuminating the building as huge crowds watched in awe. Inside, it provided more than 2.2 million square feet of leasable office space, 73 fast elevators, state-of-the-art facilities for the period, and a public observation deck on the 86th floor offering stunning 360-degree views of the city and beyond. For nearly 4 decades, until the original World Trade Center towers rose in the early 1970s, it remained the tallest building on Earth. Tragically, the grand opening arrived at the worst possible moment. The Wall Street stock market had crashed dramatically in October 1929, plunging the country into the Great Depression. Financial institutions failed by the thousands, factories closed, farms went bankrupt, and unemployment climbed to about 25% of the workforce. Companies shrank or vanished entirely, eliminating any need for additional office space. As a result, when the Empire State Building opened its doors, roughly 3/4 of its rentable floors stood empty. Income from rents fell dramatically short of what was needed to cover ongoing expenses such as electricity, heating, elevator operations, janitorial services, security, and insurance. To save money, lights were kept off in unoccupied sections after dark, leading newspapers and the public to dub it the empty state building in a tone of ridicule. The financing behind the project relied heavily on borrowed money. The developers anticipated that the economic boom would continue and tenants would rush to occupy the premium space. When the depression deepened instead, payments on the debt became burdensome. Many observers at the time viewed the tower as an extravagant folly, a monument to excessive optimism or even arrogance during a collapsing economy. Nevertheless, the principal investors, bolstered by support from powerful families including the DuPonts, chose to hold on rather than default or sell at a loss. What saved the project was a deeper financial logic that went beyond collecting monthly rent checks. The sheer prestige of owning the world's tallest building carried enormous intangible benefits. It signaled strength, vision, and reliability to banks, investors, and business partners. This reputation made it easier to secure additional loans, refinance existing obligations on favorable terms, or attract capital for separate deals. In essence, the building enhanced the owner's overall credibility in the financial world. Another crucial revenue source emerged early: the observation deck. From the opening months, thousands of visitors paid admission to ascend and enjoy the breathtaking vistas. Ticket sales provided a steady, relatively predictable stream of income that helped offset the weak office rents. Unlike tenant leases tied to economic cycles, tourism proved more resilient and diversified the building's cash flow. Furthermore, the property itself functioned as a high-quality financial instrument. In an era of uncertainty, a centrally located, world-famous asset offered excellent collateral. Lenders recognized its enduring worth despite temporary low occupancy. Owners could use this value to manage debt, extend maturities, or borrow against it for other purposes. The Empire State Building became less a conventional real estate investment focused on immediate cash flow and more a long-term vehicle for storing and leveraging capital through economic storms. The tough conditions persisted through the 1930s and into the 1940s. The Great Depression refused to lift quickly, and then World War II imposed rationing, material shortages, and workforce disruptions. Demand for commercial office space stayed low for almost 2 full decades. The building ran at a loss or barely broke even during much of this period. Managers cut wherever possible, including strategic use of lighting to make the tower appear more active from the outside at night. Signs of improvement appeared after the war ended in 1945. The American economy surged in the post-war years, fueled by pent-up consumer demand, industrial reconversion, suburban growth, and New York's emergence as an international financial and corporate center. Businesses expanded again, and office tenants gradually filled the vacant floors. By the early 1950s, occupancy stabilized at profitable levels. In 1951, the property sold for $51 million, setting a record price for any single building up to that point and proving the assets recovered and enhanced value. Over the following decades, the Empire State Building solidified its place in global culture. It starred in motion pictures, most famously the 1933 classic King Kong, where the giant ape climbed its spire. Countless photographs, postcards, and tourist brochures featured its silhouette against the skyline. The colored tower lights, added in later years, became a nightly spectacle, changing hues to mark holidays, civic events, sports championships, charitable causes, or world news. The observatory consistently ranked among New York City's most popular paid attractions, drawing millions of visitors annually and contributing reliably to revenue. Owners continually modernized the property. Renovations updated lobbies with marble and stainless steel, installed energy-efficient systems, improved air quality and accessibility, and enhanced security. In 2013, key assets including the Empire State Building were contributed to Empire State Realty Trust, ESRT, a publicly traded real estate investment trust listed on the New York Stock Exchange. This structure allowed broader investor participation, professional oversight, and transparent reporting of performance. The 2020s introduced new pressures on commercial real estate nationwide. The COVID-19 pandemic, beginning in 2020, dramatically accelerated the adoption of remote and hybrid work arrangements. Advances in video conferencing, Cloud computing and collaboration software enabled many employees to work effectively from home or elsewhere. Some corporations reduced their physical footprints, subleased excess space, or hesitated to sign new long-term leases. At the same time, central banks raised interest rates aggressively to combat inflation, making borrowing more expensive and pressuring property valuations. In Manhattan, overall office vacancy rates rose above pre-pandemic averages, with some reports citing figures near 18% in recent periods. Darkened floors and prominent towers served as visible indicators of changing work habits, cautious corporate spending, and shifts in how capital circulates in urban environments. Despite these headwinds, the Empire State Building and its parent trust performed relatively strongly. Management emphasized ongoing capital improvements, green building certifications, modern tenant amenities like fitness centers and conference facilities, and a focus on flight to quality the preference of businesses for premium, well-maintained, transit-rich locations with strong ownership. According to the latest available data from Empire State Realty Trust's fourth quarter and full year 2025 earnings release, announced in February 2026, the company's total commercial portfolio occupancy reached 90.3% as of December 31, 2025. Within that, office occupancy stood at 89.9% occupied, while the lease percentage, including commitments for future move-ins, was notably higher at 93.5% for offices. During 2025, ESRT signed leases for nearly 1 million square feet across its properties, including significant deals for office and retail tenants. Mark-to-market rent increases on new and renewed leases averaged positive spreads, reflecting pricing power in desirable spaces. The iconic observatory at the Empire State Building generated $90.1 million in net operating income for the full year 2025, supported by robust domestic tourism even as some international travel lagged. Looking ahead to 2026, ESRT provided guidance expecting commercial occupancy to end the year in the range of 90% to 92%. A known temporary factor involves the expiration and re-leasing of space previously occupied by the FDIC. Although already committed to a new tenant, LinkedIn, at improved terms, the transition period creates a short-term impact estimated at about 270 basis points on same-store net operating income and roughly 3 cents per share on core funds from operations. Overall projections remain optimistic, supported by continued leasing activity, controlled operating expenses, a solid balance sheet with substantial liquidity, no major debt maturities until 2027, and the completion of a shift to a fully New York City-centric portfolio after divesting suburban holdings. This modern performance echoes the building's foundational lesson. From its opening in 1931, the Empire State Building demonstrated that maximum occupancy was never the sole objective. Apparent emptiness during the Great Depression masked a deliberate strategy centered on prestige for financial credibility, diversified income from tourism, and the asset's role as reliable collateral in turbulent times. Owners bet on patience, branding, refinancing flexibility, and the inevitable return of economic cycles. As of February 19, 2026, the tower continues to evolve. It welcomes visitors daily, hosts special events and broadcasts, and attracts high-caliber tenants drawn to its prestige and central location. Its enduring success offers both a warning and encouragement for today's urban finance landscape. Partial vacancies in famous skyscrapers can highlight broader trends: remote work persistence, elevated interest rates, or re-evaluations of office needs, but they do not spell permanent decline for quality properties. History shows that iconic, well-managed assets endure and rebound through adaptive strategies and long-term thinking. In summary, New York's most famous building teaches a profound truth about real estate and capital. Structures like the Empire State Building are not merely places to conduct business day-to-day. They function as vessels for wealth preservation, symbols of enduring confidence, and strategic instruments that outlast economic downturns. The old nickname \empty state building has long since faded into history, replaced by admiration for a survivor that transformed initial risk and apparent failure into one of the most celebrated and valuable properties in the world.